Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 31st of July. During the Asian day Tuesday, the RBA will announce its policy decision, and the forecast is for the bank to keep rates unchanged once again. July has been anything but boring for Aussie traders. The fuss began after the minutes of the latest meeting showed a discussion regarding the level of the neutral policy rate in Australia, which was enough to raise speculation that the bank may be preparing for a lift-off soon. However, a few days later, both Governor Lowe and Deputy Governor Debelle poured cold water on such expectations, signaling that markets shouldn't read too much into that conversation. Lowe made it clear that the bank is likely to stay on hold for a while. Having said that, we think that this meeting will still be closely watched for any updated signals on policy, and in particular whether the bank is comfortable with the latest rise in Australian yields as well as Aussie's appreciation. Indeed, both Lowe and Debelle noted that a lower Aussie would be desirable, implying there is a risk that the statement communicates a greater than previous discomfort about the recent surge in the Aussie. In such a case, the Australian dollar could correct lower. Aussie dollar traded in a consolidative manner on Friday, staying between the support of 0.7950 and the round figure of 0.80. On Thursday, the pair slid back within the sideways range between 0.79 and 0.80, and thus we consider the short-term outlook to have turned back to neutral. That said, if the RBA appears more concerned than previously with regards to Aussie's appreciation, we may see the pair sliding below 0.7950 and challenging the lower bound of the aforementioned range at 0.79. A clear dip below 0.79 could set the stage for extensions towards our next support of 0.7840. Now, as for the bigger picture, as long as Aussie dollar is trading above 0.78, which acted as the upper bound of a wide range that had been containing the price action since the beginnings of March 2016, we still see a positive longer-term outlook. We would treat any possible retreat that stays limited above 0.78 as a corrective phase. Now, as for today's highlights, Eurozone's preliminary CPIs for July will be in focus. The forecast is for the headline rate to have held steady, while the core rate is expected to have ticked down. We view the risks surrounding both forecasts as skewed to the upside. The July 2016 monthly CPI prints, which will be dropping out of the yearly calculation now, were minus 0.6 and minus 0.7 respectively. Therefore, even in case we get soft monthly prints today, as long as they are better than the dreadful prints of July 2016, they could still drag the yearly rates higher. What's more, the yearly change in oil prices turned positive in July, which further supports the case for an upside surprise in the headline rate. In case of better than expected CPIs, the euro could come under renewed buying interest. We also get the block's unemployment rate for June. Eurodollar traded higher on Friday, broke back above 1.1710, but hit again resistance at 1.1775 before retreating somewhat. The rate continues to trade above the uptrend line drawn from the low of the 22nd of June, and as a result, we consider the near-term picture to still be positive. Even if the pair retreats a bit more today, we think that such correction could encourage the bulls to take the reins again and shoot for another test at 1.1775. The catalyst for such an advance may be accelerating Eurozone CPIs today. A clear break above 1.1775 is possible to open the way for our next resistance of 1.1880. Now in the US, the Chicago PMI and the Dallas Fed Manufacturing Activity Index, both for July, are due out. We also get the nation's pending home sales for June. Now, as for the rest of the week, on Tuesday, besides the RBA decision, we get a raft of economic data from the US. The core PCE price index for June, personal income and spending data also for the same month, as well as the ISM manufacturing PMI for July. In the UK, the manufacturing PMI for July will be in focus. On Wednesday, New Zealand's employment data for the second quarter and the US ADP employment report for July are to be released. Thursday is Super Thursday in the UK, meaning that besides the Bank of England rate decision and the meeting minutes, we also get the quarterly inflation report. Finally, on Friday, the US employment report for July will take center stage, and expectations are for another solid report overall. We also get Canada's employment data for the same month. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.